Hey, welcome back to The Dive. Joining us today is Bloomberg Intelligence Senior Commodity Strategist, Mike McGlone. But before we dive into it, I just want to take a second to remind you, if you want to find us again easy, all you have to do is hit that subscribe button down there. Hey, Mike, welcome back to The Dive.
Well, hello. Thanks for having me back.
Okay, so one of your most recent tweets is regarding energy and crude oil. As global oil demand recovers, global product inventories will drain at a faster pace. So do you think this will result in higher crude prices?
No, I'm bearish crude oil. I think crude oil is at the upper end of the range. It's been declining since 2008. It plunged in 2014, and now nearing 70. It's the upper end of the range. So let's look at the simple facts. It's a high elasticity of supply commodity, means supply can come on real easy when prices move higher, i.e. shale can come back. We have the highest excess production out of OPEC ever. And the whole world's expecting demand to come back the way it was before. So let's look at that. If you compare unleaded gasoline demand in the U.S. compared to the same time in 2019, got to skip last year because it was kind of a distortion, it's down 7%. And unleaded gas, liquid fuel demand in this country is the same as it was 20 years ago. And that's before the advent of EVs. So it's just typical efficiency. So to me, slack demand, increasing supply, markets at the upper end of the range, and the world's going towards electrification and digitalization. Cannot be bullish crude oil and things like, with a high elasticity of supply, and corn I put in the same bucket. So that's why in commodities I tilt towards metals for potential sustainable upside. And in that same bucket, I have to include some cryptos and Bitcoin because they're replacing gold in portfolios.
Since the last time we spoke, Elon Musk announced that Tesla won't accept any further payments in Bitcoin, citing energy consumption concerns. Bitcoin and Ethereum are down more than 12% since this announcement. So is this the end of the bull run?
No, I think it's just a correction in the bull run. One key thing what's note about Ethereum, it's still up about almost over 200% in the year. This is the end of towards the end of May. Bitcoin's up 30% in the year, and the Bloomberg Galaxy Crypto Index is up 100%. So I think what he just pointed out is the strength of Bitcoin. The key strength of Bitcoin is it uses a lot of energy. It's the source of that energy that matters, and the type of intermittent demand that works well in Bitcoin that is actually you get from solar and most renewable sources like wind is actually ideal for Bitcoin. So everything's tilting that way. And the fact that China is banning it means less use for coal. So I think what Musk did is he pointed out the strengths of Bitcoin. Yes, it uses a lot of energy because it's very strong. It's like what humanity's done in the history of advancement is we harness energy and use it to our benefit, i.e. we don't go out with shovels anymore and dig holes. We have machines do that. We don't, I'm coming from a farm background and all our machines do our work. You don't have to do back-breaking work anymore to harvest our crops. So to me, this is part of it. It's the digitalization of money. Bitcoin's global, well in this way, becoming a digital reserve asset. And yes, it uses energy, but a key thing I'll end on is Ethereum has been well outperforming Bitcoin this year, and with its ETH or ETH 2.0, quote unquote, it's shifting to a much, to proof of stake versus proof of work, and to a EIP, Ethereum Improvement proposal that will probably cut the supply. So I view them both in, bull markets, and Ethereum potentially better positioned as it cuts supply and its use of energy.
How much of an impact do you think Dogecoin has on Bitcoin? If Dogecoin had a major pullback, do you think that would have an impact on Bitcoin?
Well, in looking back at Dogecoin getting on Saturday Night Live, that was a complete example. That was the bell ringing of speculative excesses in the space. And so Dogecoin is insignificant to Bitcoin, but it did indicate the market was getting too frothy. There's way too much speculation in the whole entire space. Bitcoin and Ethereum both dropped about 60%. And Dogecoin, I'm looking at it right now, I'm on 30 cents. I think it's done. I mean, its run is done, and it's just had its 15 minutes of fame, or maybe 15 days, or more like 15 weeks, and it's over. And then you look over at real markets like Bitcoin and Ethereum. Now, they do represent significant use cases that have practical value, and I think they're going to continue to advance. Just Dogecoin was indicative of speculative excess, and there still is. So if you look at coinmarketcap.com, there's 10,000 cryptocurrencies. Last year, there was 5,000. That's massive supply, ease of entry. Rules of economics don't favor higher prices for that broad market. But an index that tracks the market and the few that survive will do well. And I think clearly Bitcoin and Ethereum are in that space.
Okay, so there have also been some concerns reported that Tether may be propping up the price of Bitcoin. Do you have any thoughts here?
Sure. Well, I think it is. One thing that's notable about Ethereum is it's the building block for the entire space. The world's going digital, DeFi, decentralized exchanges, NFTs. Ethereum's the building block, and the whole world's going that way, and Ethereum is just part of that. So a key fact about Ethereum is, despite the fact that we've had major allocations from institutions and Bitcoin going institutional, and a lot of entities, billionaires, companies like Tesla allocating to Bitcoin, Ethereum has continued to outperform. Its key point I like to point out is that so far, Ethereum, as far as total market cap of all cryptos, is around 20%. Last year was 10%. And that trajectory remains clearly from the lower left to the upper right. It's showing divergent strength. Bitcoin's dominance is declining. Now, I'm not bearish Bitcoin, but you have to acknowledge and recognize facts of performance. And Ethereum's clearly outperforming. I don't see what should stop it from doing it. I think it should continue. So I see Ethereum stuck in the 2,000 to 4,000 range for quite a while and continuing on that path similar to where Bitcoin was in 2017. It started the year around 1,000 and ended the year around 17,000. So Ethereum still is an upward trajectory, and I think it's probably heading towards 10,000. Questions when, and it does have a solid use case. I'll end with this. The most widely traded cryptocurrency on the planet, Tether, it's an Ethereum token, and it just represents the digitalization of money and increasing dollar dominance in the world that's going digital.
Okay, so Tether is Ethereum.
Ether is basically the coin, it's the money. Ethereum is a whole blockchain and network.
Ah, okay, I see. Okay, so do you see any sort of link between the price action in gold and Bitcoin? Is this more about market psychology than real money flows?
Both. It's clearly both. So the way I look at gold now is you cannot analyze gold without having Bitcoin in the same bucket because it's clearly happening. Gold ETF flows have been downward. I think they've stabilized, and gold's probably put in a good low for the year, just around 1,700. And Bitcoin inflows have been quite positive. Now, recently they've been outward, but the way I look at it is a world that's going digital. And for those who've been allocating holding gold in past history, to not have some Bitcoin in the same bucket might be considered irresponsible, i.e., if Bitcoin just continues to do what it has been doing, and that is it's well on the way becoming the global digital reserve asset, and it potentially is making gold less significant. It certainly has been this year. If you don't have some Bitcoin in that bucket, you risk of missing out. Your risk of missing out is very important. So I view it as one of the most unique examples of human nature in markets ever. Anybody who's been holding, allocating, or using gold in portfolios, let's talk about central banks, and is not allocating some of that wealth or some future flows to Bitcoin, are at risk of not properly diversifying, and maybe this thing that's this analog version, a digital reserve asset, switching to the digital. So that's to me still the narrative, and still to me is what keeping me quite bullish on Bitcoin.
While predictions for Bitcoin prices have been restrained, you still have a price target of $100,000 for Bitcoin. Let's talk about the risk side for a minute. Where do you view the biggest risks for investors who share the long thesis?
The biggest risk, I think, is some kind of technology glitch I cannot predict. Now, some people have said maybe it gets replaced by another crypto, maybe it's Ethereum. I think that's less likely because Bitcoin does one thing and one thing well, the digital reserve asset. And then there seems like Ethereum that might be used more for, this building the blocks, kind of more like the stock market and rapidly advancing technology there and everything going fintech. So I view it as it's still likely to appreciate. I didn't think it'd get much to levels where it reached down to 30,000. I don't think it gets much below 20,000. I think it's going to continue on a trajectory towards 100,000. And a key dangling carrot that some people I think have forgotten about and pushed to the wayside is US ETFs. Now in Canada, they've launched, they're doing fine. It's just a matter of time here for one key reason. We might get a baby step. ETF in the U.S., the approval of an ETF, a Bitcoin ETF in the U.S. to track Bitcoin futures is just a matter of time. Why? Because we have, that's my background. We have plenty of commodity ETFs that track futures that have less liquidity now than the Bitcoin futures. So there's really no excuse for the SEC to say no anymore. It's a regulated exchange, CFTC approved. All the checks are marked for these official. So it might be a baby step, but that allows investors in this massive space of 401ks and managed money to get exposure, and it adds legitimacy to the space. So I think it's a baby step. It might not be an ETF that tracks the actual physical, but at some point that might be happening first. ETFs in the US track Bitcoin, track futures, and then the next step. But that to me is part of the dangling carrot of Bitcoin, still a nascent technology, it's still not in many portfolios, and this would open the doors for most investors.
All right, good stuff. Well, thank you so much for jumping on with us today, Mike.
Oh, thanks for having me.
And to our audience at home, thanks so much for watching. We'll see you next time. And in the meantime, why don't you check out one of our other videos up here? And let me know in the comments below what your favorite coins are.